Do you not look at this situation where everyone is talking about AI and thinking, well, I should be having some of that because I can see that there's a tailwind? Do you stick to your principles and say, I'm only going to look at companies because of they tick the right boxes for valuation, long-term corporate strategy, and sort of perhaps clarity of earnings?
Yeah, look, the short answer is we stick to our principles. We're not going to go and buy things because it's going up. And I think probably the vast majority of people who own stocks that are in the AI boom own them because they're going up, not because they actually know what the future is with regard to AI. I don't think we know what the future is with regard to it. And it's not true to say we haven't got it in the air. I mean, we own quite a lot of Microsoft, Meta, and Alphabet, and all of them are involved in this. The difference between them and, say, something like Nvidia is if this afternoon, somebody announces that actually the AI thing is complete spoof and the whole thing stops, I'm fairly confident that Nvidia will go down sort of 80% or more, right? Whereas our Microsoft and our Meta and our Alphabet have all got other businesses. They've got their social media, advertising, search, operating systems, code, GitHub, LinkedIn, Surface, all of those things. I'm sure they'll have a very bad hair day. I'm just confident of that, but I'm equally confident their other businesses will persist and be okay.
Well, I was thinking, obviously, because you have some tech, but you also have some sort of more defensive style companies. So, let's say if we do get a market pullback, do you think that you'd fare much better relative to the market?
I'd be surprised if we didn't. Yeah. I mean, and don't just think about market pullback. I mean, I'm not predicting anything here, but how about an economic downturn? We haven't had an economic downturn for 17 years. It's quite a long time, isn't it? I guess the interest rate trend at the moment makes it not very likely, but there's plenty of warning signs out there in terms of what's happening in credit, particularly private credit, what's happening in terms of employment. So it's not like it's obviously okay at the moment, is it? And if there were an economic downturn, then yeah, I'm pretty sure that Procter & Gamble and Church & Dwight and all of those things will fare an awful lot better than the highly valued high tech. Because one of the things about tech is, if you look back in history, it wasn't very cyclical. I mean, there was a secular growth trend in terms of people's use of technology and therefore in share prices. It's now such a large part of spend, but by companies, I can't see how it can fail to be cyclical now.
I mean, there is a lot of talk around red flags in the market, whether that's an AI bubble, could it burst? But also there's other things, people worrying about the US banking, regional banking sector, and just the worry list is getting longer and longer. Are you feeling slightly concerned as an investor? Because obviously you've seen good times and bad times.
Yep. Yeah, not especially, no, for a couple of reasons. One is we own quite a lot of defensive stuff, so we'll be relatively okay. The second thing is, in terms of predicting downturns, it's not what we do for a living. But if I were trying to look at it at the moment, I would say probably the most positive thing I can think of is that people are worried. It typically, you don't get the downturn when everybody's saying, oh, I'm really worried about what's happening in terms of employment. I'm really worried, I'm worried about this K-shaped recovery and people at the bottom not having much consumer power. And it usually happens when we're all sitting here being fat and happy and cheerful and thinking nothing can possibly go wrong, and it hits you in the back of the head. So actually, I think that, as they say, a bull market climbs a wall of worry. At the moment, there is a wall of worry, which probably means that the bad events are not just about to strike.
So obviously, markets keep hitting new record highs. It does so. You've got this one group of people worried. You've got this other group of people saying, "Actually, this is brilliant. We're happy to keep buying." It feels very unusual. But again, through your career, have you seen this before?
Yeah, and when you say markets are making new highs, they are. But of course, it's a very narrow base. It's really AI that's making new highs. The rest of it is not making anything particularly. And there's that. So, yeah, I would say at some point we're going to have, of course, are we going to have a market crash? Yeah. I just don't know when. Are we going to have an economic downturn? For sure. I don't know when with that either. The thing that is probably most positive at the moment is that a lot of people are worried. We typically don't get the downturn when there's plenty of public hand-wringing about things that are going wrong at the moment. We usually get it when there's only blue skies in sight and everything seems to be going well.